Welcome to Market Brief After Hours. We are kicking off a brand new month, and May is already bringing some serious heat to the markets. We've got fresh record highs, massive tech earnings, shifting global trade dynamics, and plenty of movement in the currency and crypto spaces to unpack today.
It really is an incredible start to the month. We came out of a very powerful April, and it looks like that momentum is just carrying right over. The big story, unsurprisingly, is large cap tech leading the charge, but there is a lot of nuance under the hood when you look at the broader economic data and how different sectors are reacting.
Let's dive straight into those key takeaways, starting with the major indices. We saw some divergent action today. The S&P 500 and the Nasdaq pushed to new heights, but the Dow actually slipped. Let's get the exact numbers on the board.
Right, so looking at the S&P 500, it rose 0.29% to close at 7,230. That is a fresh all-time intraday high and another record close, building beautifully on the recent push above that 7,200 threshold. The Nasdaq Composite was the real star, advancing 0.89% to post a record finish at 25,114.
And that Nasdaq surge was heavily fueled by Apple, right?
Absolutely. Apple climbed more than 3% after beating its fiscal second quarter earnings and revenue expectations. What really caught the market's attention was their current quarter revenue outlook. It was stronger than expected, and that completely overshadowed some weaker iPhone sales data. It essentially reinforced the leadership of the technology sector.
But the Dow didn't get to join the party.
It didn't. The Dow Jones Industrial Average fell by 0.31%, dropping 150 points to close at 49,499. But context is key here. The Dow just recorded its strongest monthly performance since November 2024. What we saw today was less about a breakdown in market sentiment and more about classic sector rotation. Investors were pulling some chips off the table in industrials and rotating that capital right back into large-cap tech to chase that Apple-driven rally.
That makes perfect sense. Now, looking overseas, the UK market had a pretty interesting session, especially with most major European markets shut down for the May Day holiday. The FTSE 100 closed roughly flat.
Yes, the FTSE 100 slipped just 0.14% to close at 10,364. But the real story in the UK right now is trade. We got fresh data showing that UK goods exports to the US, excluding precious metals, plummeted by 24.7%. That is a £1.5 billion drop.
That is a massive hit. What's driving that?
It's the direct result of the recent Liberation Day tariff measures introduced by President Trump. Car exports to the US are stuck below pre-tariff levels, and meanwhile, imports from the US actually rose at the start of the year. So the UK is now staring at a trade deficit against its largest trading partner for 3 consecutive months.
Was there any silver lining for the UK economy in today's data?
There was. UK manufacturing is showing real resilience. The S&P Global Manufacturing PMI rose to 53.7 in April, up from 51.0 in March. That's the strongest reading since May 2022 and marks 6 straight months of expansion. Plus, net mortgage borrowing hit £6.15 billion in March, a one-year high, showing that lower borrowing costs are successfully stimulating domestic demand.
Before we move on to commodities and crypto, let's quickly touch on Asia.
Asian markets were generally constructive where trading was open. Japan's Nikkei 225 rose 0.38% to 59,513, and the Topix gained 0.04%. That was supported by a really strong manufacturing PMI, which climbed to 55.1 in April. Interestingly, Tokyo's core CPI slowed to 1.5%, staying below the Bank of Japan's 2% target. Down in Australia, the ASX 200 gained 0.74% to hit 8,733, snapping an 8-session losing streak thanks to a rally in mining shares.
We are going to take a quick break. When we come back, we'll dig into the massive swings in oil, a deep dive into the Forex markets, and the individual stocks making the biggest moves today. Stay with us. Welcome back to Market Brief After Hours. Let's pivot to energy. Oil prices took a noticeable dip today, and it seems geopolitics is entirely in the driver's seat.
Spot on. We saw US West Texas Intermediate crude futures fall 2.98% to settle at $101.94 a barrel, while Brent crude slid 2.02% to $108.17. The catalyst was news that Iran sent an updated peace proposal through Pakistani mediators. It raised hopes that a settlement with the US might actually be on the table.
Even though the response from the U.S. was lukewarm at best?
Exactly. President Trump came out and said he wasn't satisfied with the offer, which caused prices to bounce off their absolute lows of the session. But the overall decline was still significant enough to ease some immediate inflation anxiety and take the pressure off energy-sensitive sectors of the market.
Speaking of inflation anxiety, we got some highly anticipated U.S. manufacturing data today. How did the Treasury markets react?
Treasury yields barely budged. The 10-year yield fell just 1 basis point to 4.38%, and the 2-year yield rose less than a basis point to 3.88%. The reason for the muted reaction is that the ISM manufacturing index was a bit of a mixed bag. It held at 52.7 in April, which missed the 53.0 expected by economists.
But there was a red flag buried in that report regarding costs, wasn't there?
A massive red flag. While new orders rose to 54.1, showing solid demand, the prices paid component absolutely surged. It jumped from 78.3 in March all the way to 84.6 in April. That is the highest reading we've seen since April 2022. Supplier deliveries also slowed down, so businesses are ordering ahead to front-run potential shortages, but they are paying a heavy premium to do it.
Let's shift gears to the foreign exchange market. We've seen some heavy volatility recently. Can you walk us through the major pairs and where they sit relative to their moving averages?
Let's start with the euro. Euro USD closed at 1.1719, down 0.11% for the session. It pulled back after failing to hold gains near the top of its recent range. However, structurally, it's still looking constructive. The price remains above the 50-day simple moving average, which is at 1.1646. It's holding right around the 100-day SMA at 1.1709, and it's holding above the 200-day SMA at 1.1675. As long as it sustains a hold above that 100-day SMA, the bias remains tilted toward testing the highs again. Immediate resistance is at 1.1785.
And what about the British pound?
GBP USD had a similar day. It retreated after being rejected from its session highs, closing down 0.21% at 1.3575. But again, the broader moving average structure is very supportive. It is currently sitting above the 50-day SMA at 1.3413, the 100-day SMA at 1.3470, and the 200-day SMA at 1.3415. The pair is going to need to decisively reclaim the 1.3600 level to get that upside momentum going again.
The yen has been on a wild ride lately. Did it manage to find its footing today?
It did. USD JPY stabilized after a really sharp recent correction. It closed up 0.30% at 157.06. Looking at the technicals, it's currently trading below the 50-day SMA at 158.56 and just under the 100-day SMA at 117.25. However, it is still above the longer-term 200-day SMA at 153.99. This leaves the near-term outlook looking much more balanced. If it can push back above that 100-day SMA, short-term sentiment will improve dramatically.
While we are on the topic of technical levels, how are precious metals looking?
Gold is in a corrective phase right now. It closed down 0.15% at $4,609. It's currently trading below both its 50-day SMA of $4,834 and its 100-day SMA of $4,748. But much like the yen, it is holding firmly above its 200-day SMA, which sits way down at $4,257. So the Lotan trend is still intact, even if short-term momentum is pressured.
And silver?
Silver actually had a fantastic day, rebounding sharply by 2.33% to close at $75.43. Buyers really stepped in after the recent weakness, but it still has work to do. It's trading below the 50-day SMA at $78.31 and the 100-day SMA at $79.25. The 200-day SMA is providing a massive floor all the way down at $62.17.
Let's talk about digital gold, Bitcoin. It seems like the bulls are back in control.
They certainly are. Bitcoin traded around $78,500 late today. It rose 13% in April, which marks back-to-back monthly gains and its strongest monthly advance in a year. Remember, this comes after 5 straight months of declines following that massive all-time high of $126,000 back in October.
What is driving this sudden influx of capital?
It's all about the ETFs. Spot Bitcoin ETFs attracted a staggering $1.9 billion in inflows just during April. Plus, the broader risk-on appetite in equities is spilling over. And it's not just Bitcoin. Ethereum rose 1.9% today to $2,305, securing an 8% gain for April. We also saw positive action across the board today. XRP was up 1.6%, BNB ticked higher by 0.1%, Solana added 0.9%, Dogecoin rose 2.9%, and Cardano advanced 1.4%. The appetite for the wider crypto complex is definitely renewed.
To wrap things up today, let's hit the big market movers. We already talked about Apple closing at $2.01 per share on a massive $111.18 billion in revenue. But there were some other absolute fireworks in the tech sector today.
Fireworks is the right word. Look at Atlassian. Shares soared over 29%. They reported third-quarter revenue of $1.79 billion, which completely crushed the $1.69 billion analysts were expecting. Twilio was another massive winner, closing up 23%. They reported Q1 revenue of $1.41 billion and upgraded their full-year organic revenue growth forecast to a range of 9.5% to 10.5%. And SanDisk jumped more than 8% after posting Q3 revenue of $5.95 billion, blowing past the $4.72 billion consensus.
But it wasn't all green screens. A couple of companies took a severe beating today.
Yes, guidance cuts were punished heavily. Roblox shares tanked 18% after they slashed their full-year bookings forecast down to a maximum of $7.6 billion. That's a steep drop from their previous high estimate of $8.55 billion. And in the consumer space, Clorox tumbled 9%. They actually met their Q3 revenue targets, but they lowered their full-year profit guidance. They cited rising energy costs and consumers becoming much more selective with their spending.
It really highlights how unforgiving this market can be if a company hints at future weakness, even while the broader indices are hitting record highs. That is all the time we have for today's breakdown. If you find this useful, please follow Market Brief after hours.